Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil, and uranium in a separate video. I'll leave a link for that in the description section below. As always, this is general commentary. It doesn't take your personal situation into account. With all of that said, let's get into this first chart. So I've got a chart of the S&P 500 up here, and it's been another week of new all-time highs. We really now have a series of new all-time highs over the last few days. And this is actually the strongest upward phase we've seen in the S&P since, got to go back to 2021 in the post-COVID recovery to get a rally of this strength and this magnitude. It's really has been something which has been incredibly impressive. The trend remains firmly to the upside. There's no immediate signs of a pullback. Quite simply, I think the play here, it really is to remain long. And I think the money in these situations is made by staying on the trend, not taking profits when you think it's run too far. And that's because, like, I think the thing we've got to remember is a trend can run further than most people can believe possible. It's just how these trends work. And I've been wary of a pause or some sort of consolidation for several weeks now, and that hasn't been the case. I've thought that I thought there was a strong possibility that maybe we'd see some sort of pullback towards the moving averages, but so far that hasn't happened. It's really has been one-way traffic. I think for anyone without a position, I still think this is a difficult entry point. With the market having run so far, being stretched above averages, I think it's a difficult entry point. I think the potential for a meaningful pullback, it still does remain. And I'm also conscious that the S&P 500 is now at 5,000. And so you may think 5,000, what's the big deal about that? And I showed you in last week's video that the index does have a history of pausing for the first time it reaches every 1,000 milestones. So 1, 2, 3, and 4,000. Go back and look at the chart, see what happened around those points. So maybe it won't happen this time, but it is just something to be aware of in terms of, like, do you buy at this current point after such a big rally? I think that for those who are already in this market, and this is something I've been saying for a while now, I think the play here is to keep holding stocks that have been rising and use trailing stops that give them room to move. I think this is the best way to keep upside open while managing risk, because the risk is at some point we do get a pullback, but if you're using those wide trailing stops, you've got the potential there to see off a routine pullback, a consolidation, stay on the trend, see if it extends upwards as we move into the year. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Really helps the channel when you do those things. So please consider doing that. And now, look, let's just quickly jump over, have a look at the Russell, which is the small cap index, the Russell 2000. I think this is a really interesting section of the market, in that we've got the Russell consolidating along the 50-day moving average. So I've got the 50 and the 100-day moving averages on the chart. Had a rebound off the 50-day back in January, another pullback towards it, having another rebound off there now. For me, this stability around the moving averages, it suggests there's accumulation on this pullback. So I've had the large rally off the October low, the pullback, and it appears that there is accumulation happening on this consolidation. And that's a very different situation to what we saw last year, where each rally was greeted with distribution. Now we seem to have accumulation. So we've got this ground shift in the way that the market appears to be operating. I think there's possibly there's probably time. I think there's probably time to wait to see whether the Russell does get another push higher, whether it does get through this resistance which comes in at around 2000. Like, one option is to buy at current levels. But look, there's always a possibility that it continues to go sideways for a while longer, or it can start to decline. Maybe it declines further, consolidates, and then moves up. So there's probably not a rush to buy it at current levels, but I think the buy point would be a break above this overhead resistance at around 2000. That's probably the get-in point. And there's this, I think the potential's there. This is a large basing structure that is now in place, and this could be the early stages of a larger recovery that ultimately does take this back to new all-time highs over maybe the next 12 to 18 to 24 months. Also interesting, just looking at the micro cap. So this is an iShares micro cap ETF. Similar sort of situation to the Russell. Had a false break to the downside in October. It quickly snapped back above the moving averages. And we've got the same setup of rising price, rising moving averages, pull back to the moving averages. I think from a risk reward play, I think that the smaller stocks are looking more interesting than the SP 500 and the Nasdaq at this present time. I think that's where we can potentially find some opportunity, which is yet to become really stretched. So look, let's leave that there for this week. Thank you for joining me. Hopefully that's been helpful. Please give me that like and comment, and I look forward to coming back and talking to you next week. Till then, bye for now.